But let's get to our special segment now, Quarter Se Quarter Tak. Sonal is here today to take us through what you can expect from the oil and gas sector in this quarter. Sonal, over to you.
Thanks for that, guys. Well, oil and gas stocks, they have been very excited ahead of numbers, and it is expected to be a decent quarter, at least for some of the segments here as well. First, the macros. Brent crude prices continue to be lower, 31% down on a YY basis, 3% on a sequential basis. This is at $78 a barrel. Even Singapore GRMs, they were lower. Big decline here, down 51% on a sequential basis. This is due to decline in cracks across most of the products. And that's why we'll see a decline in refining EBITDA for Reliance Industries, and that will impact numbers this time. Overall, Reliance's EBITDA is expected to decline 2% on a sequential basis and 1% on a YOY basis. However, the weakness in refining will be offset by strength in Jio and retail. For upstream companies now, like ONGC and Oil India, EBITDA will decline on a quarter-on-quarter basis by 8% on a sequential basis. It is on an average driven by lower gas prices because government had capped domestic gas prices at $6.50 per barrel versus 8.7 earlier. And also, as I said earlier, lower crude oil realizations will impact earnings. But star performers this quarter will be the oil marketing companies. Strength will be driven by their marketing segment, where over recoveries will be reported by all these companies. Weakness in refining segment will be seen, but that will be offset by marketing, where petrol and diesel margins are anywhere between 8 to 9 rupees per litre. GRMs are expected between $7 to $9.9 per barrel, which is a sequential decline overall. However, EBITDA and PAT is expected to improve for all OMCs, both on a YOY and on a quarter-on-quarter basis. Now, for CGDs as well, like IGL, MGL, it will be a good quarter due to lower domestic gas costs, and for Gujarat Gas due to lower spot LNG prices. Margins and volumes are expected to recover, and 19% EBITDA and 25% profit jump is expected here. On to gas utilities, because they will also see good quarter on a quarter-on-quarter basis. For GAIL, quarter 4 was very weak due to one-offs, and hence quarter-on-quarter EBITDA is expected to go up by 10 times. For Petronet LNG, high Dahej utilization and high Kochi tariffs will also aid earnings, and lower spot LNG prices will improve earnings for the gas utility space, which includes GSPL as well. Now on to valuations. Reliance trades at 23.6 times, and the PSUs continue to trade at lower valuations. ONGC at 5 times. You have IOC, BPCL and HPCL anywhere between 3 to 4 times. City gas companies between 12 to 22 times, where MGL is the cheapest in the space.
Okay, thank you very much for that. Probal Sen, the energy analyst at ICICI Securities, is now with us on the show. Probal, morning. Thank you very much for joining in. Let me start with the oil marketing companies. That's where the most recent bullishness is. They are expected to report very strong GRMs, as Sonal was telling us. And in the comparable quarter of last year, the GRMs were negative. So oil marketing companies are going to have some elevated earnings this time. Would you be bullish on the stocks at these levels? Or has the street priced in all the good news?
No, I think, we have been bullish and we have been fairly positive on the OMC space for the last month and a half or so, from the time that the marketing margins really started to ramp up and FY24 prospects became a little bit clearer. Our sense really is that there's as Sonal was mentioning, there's a very big swing. I think if you look at operating profits, almost a 50,000 crore swing from a loss of around 15,000 crore last quarter to more than 30,000 crore in aggregate of EBITDA from the OMCs this quarter. And this is despite the fact that there has been a $4 decline QOQ in GRMs. If we look at Singapore, not all of that flows through to Indian players because the product slate is different and we have some Russian crude benefit and all of that. But as a trend, GRMs are down. But the marketing margin benefit continues to be very, very strong. Our sense is that FY24 is likely to be an extremely strong quarter as far as earnings is concerned for the OMCs as a pack. Even if one assumes that at a certain point of time this year, some pass-through of this marketing margin benefit may happen for petrol and diesel. Despite that, I think the street estimates are bound to be upgraded, I think, by about 15 to 18%. That would be my sense. And to that extent, even if valuation multiples don't see a huge upgrade, just the earnings upgrades will actually ensure that there's very, very strong returns from the OMCs in FY24.
Okay, by the way, we just need to pause a little bit. That's a fabulous listing that we're seeing from Cyan DLM. And, Rima was mentioning that earlier as well. It's listed at 403 rupees a share. That's more than a 50% premium to its issue price, which was 265. So that's a very smiling, happy team as well at the listing venue. We just saw images of that. But Probal, very quickly on Reliance Industries, what do you think the SOTP value could be now? There's lots of developments that have taken place, especially on GFS. The demerger date has been announced. Also on what's happening with Reliance Retail. Overall, what's your sense? Do you see more upsides here?
I think that frankly, we'll have to sort of, get a little bit more understanding of the valuation of the financial services space. Retail, I think, given the valuations that have come up, are broadly, there or thereabouts in terms of where the street was valuing the retail business. Obviously, as and when, a listing announcement happens in due course, we'll have to understand how that happens. But as far as financial services is concerned, right now, to actually put a value base, particularly if I would leave it to our financial services team to sort of give an opinion on the business as and when we gain more understanding of what all will be housed in this segment. On an overall basis, frankly, we have had a fair value of somewhere around 2,700 to 2,750 for the stock. I don't think that we will be changing that materially at this point of time.
You said 2,750 to 3,000 is the target price on Reliance, right?
No, I said my fair value is around 2,700. I think the street is in that range.
2,700.
Between 2,600 and, yeah.
Okay, and in that, what is the value that you've ascribed to retail and financial? I missed those numbers.
To retail, I think we have around somewhere around 700 to 800 rupees a share. Financial, we're not valuing it too much at this point in time.
All right, Probal, what about the city gas distribution companies? How do you approach them from year on? Gas prices have cooled off, volumes could pick up as well. And now they're coming back into flavor after, those duties that have been introduced on propane. So your view on the stocks?
Well, I think firstly, as far as the cost environment is concerned, definitely the $2 reduction in domestic prices as well as the kind of softness we're seeing in spot LNG prices is something that will continue, to sort of make, drive margins higher over the next year or so. More importantly, the price competitiveness with petrol and diesel, which now stands at 50%, I think is a major driver for, volume growth that we would expect over the next 12 to 18 months. As far as propane's duty is concerned, I think it probably provides a slight short-term benefit, for maybe a month and a half to Gujarat Gas. But if you really look at the way that propane prices are actually behaving, one suspects that Gujarat Gas will probably need to cut prices even more to sort of remain competitive. Because the propane price reduction from $450 to $400 means that even with the duties built in, the comparable price for propane in Morbi is likely to be around 33-34 rupees, whereas Gujarat Gas's retail price is still at about 38.5. So I would say that there's a little bit of pain still ahead in the near term for Gujarat Gas. But for IGL and MGL, I think the metrics look substantially better. And even if you were to build in a price decrease in petrol and diesel, as I mentioned earlier, by the second half of the year, even then the differential for CNG versus alternate fuels remains well above 35-36%, which historically has been a comfortable level to drive, strong volume growth for both companies. So we'll be very, very bullish on both names at these levels.
Okay, and on Gujarat Gas, you're seeing a little pain. Actually, the street is also pricing it in. I mean, if you pull up the Gujarat Gas chart, it hasn't performed as well as the market has in the last 6 months. It's been sort of, lackluster, perhaps factoring in that pain that you were talking about. I also wanted your thoughts on gas utility companies, whether it is GAIL, GSPL. You do mention that there are two factors which are aiding them, right? Stronger gas demand, and now a lot of the supply side issues have eased as well. Does this portend higher, bigger upsides for some of these names?
Well, I think there are, frankly, clubbing them together is a bit tricky. I think separate factors are playing out for each of the names. For GAIL, I think the critical monitorable will be when does the impact of that 9 MMSCMD of Gazprom's disrupted volumes completely fade away. Our understanding was that after the formation of a new entity, which Gazprom had done in Singapore, and transferred the rights of the contract to that new entity, the gas supplies have resumed to a certain extent. So if that gas supply is actually resumed completely, then that is a big change from what really hurt them in FY23, specifically in the petrochemical and LPG segment, where they had to sort of obviously allocate different sources of gas, so the costs went up quite a bit. Secondly, as far as trading business is concerned, what kind of profitability trends are seen, and as you rightly mentioned, demand for gas at these low prices should rightly go up. Petronet LNG should definitely benefit from the kind of softness we're seeing in short-term and spot LNG prices. Their third-party regasification volumes have really been very muted over FY23, so one would expect some pickup there. Having said that, I think the prospects of the petrochemical expansion are something that we are not very sure about in terms of, that's 4 years of operating cash flows that will be spent on the petrochemical expansion. So we have to understand the economics of that project a bit better. Otherwise, at least in profitability terms, the business should do better. GSPL, I think, is going to be a function of the tariff order and, how the sort of gas demand shapes up. Plus, it also has to contend with Gujarat Gas's valuation, which always is a big component of its overall value. So, as and when we see Gujarat Gas's prospects improving, that would be the next trigger, particularly at these price levels for the company.
Probal, we'll leave the discussion here today. Thank you very much for joining in. Need to get